All right. Good evening, everybody. Good evening. Good evening. Good evening. Let me know if you're online. If you're online, I would like you to type your name and where you're watching from. Good evening, everyone. If you're online, type your name and where you're watching from. I'll be waiting for you in the comment section. Okay. Good evening. If you're online, I would like to see your comment, your name, and where you're watching from. Okay. Okay, so we have Mr. Nasiru from Edo State, okay, and Lynn Colleen from Calabar. Yes, I think I'm getting familiar. It's good to have you again this evening. Good evening, yes. Good evening to you also. Good evening, sir. All right, we have Emmanuel from Italy. Wow. Thank you for joining. I see how deliberate we are about increasing our income, about making our money work for us and not just continue to work and work and work without having our money work for us. So I see how much people want to make their money work for them and earn even while without stress and with peace of mind. Make Multimedia, thank you very much. Good evening. I think I have my friend there. Make from South Africa. It's good to have you here. All right. Tonight's session will be a combination of some of my alumni from my university and also people in the community and many others who are interested in learning about fixed income investments. All right, without much ado, while we wait for others, we'll go straight into it, and those that are coming late will get to watch the playback after now. Thank you, Abubakar from Sokoto, Bamidele from the United States. I see that we have people from different regions, different country in the house tonight. This shows how deliberate we are with our finances. And I bet you, I promise you, you're going to read this. Your future self is going to thank you for all of this that you're doing. All right. So once again, welcome. I am Coach Benita, as most of you popularly know me. And the reason why I'm here is because I want to help you to make money. I want to help you to make money with peace. And I want your future self to thank you. I'm also a portfolio builder, like some of you already know. So if this is your first time of meeting me, apart from being a real estate person, a land retailer, I'm also a portfolio builder. I sit with people to ensure that whatever is in their portfolio looks exactly like them. So we're going to go so deep into it as we continue in tonight's section. All right. So I believe you all can see my screen. Yes, I'm also monitoring things from my hand here. Let me make this bold. Good. All right, so welcome once again. Tonight we're going to be talking about fixed income investments. And when we talk about fixed income investments, what do we mean? It means that, okay, yeah, tonight we're going to be talking about what exactly fixed income investments means. We're going to talk about why they exist. Why do we even have fixed income investments in the first place? How does it benefit you as an investor? How does this a fixed income investment benefit you as an investor? We're going to look at that also tonight. So straight up, let's go into it. What are fixed income investments? Are my slides changing as I'm talking? Okay, I think we have a bit of delay for a few seconds. That's still fine. So what are fixed income investment? Let me explain from a layman's language. So when we say something is fixed, it means it's not changing, it's stable, So if you now say it is fixed income investments, it means that whatever is coming from these from these assets is fixed. It's not something that fluctuates. It's not something that changes. Take for instance, if a company promised to return 10% of their interest to you when you borrow them money, it's certain that that 10% you're going to get it. At maturity, they will not tell you your 10% has become 9% or 8%. So it makes it fixed. So when we say fixed income investment, like I define here, let me now go to the real definition. It says fixed income securities are debt instruments used by governments, corporations, or other entities to raise capital. Now, when we talk about debt instruments, it means that these people are ready to borrow from you, and you are the lender, you're lending them. So, who are the people you're lending to? When we talk about fixed income investments, you could be lending to governments, you could be lending to organizations, corporations. These are the people you lend to. So either it's the government or corporations, whichever way, they are still fixed income investments. But what matters most is that you know you're lending these people your money, they are borrowing from you, they are borrowing at a certain rate, a fixed rate that you know, and they also know that this is what they will return at the end of the tenure of this instrument. So going further, when you invest in them, you are essentially lending money to the issuer. I've explained that already. And in return, the issuer promised to return both your capital and your interest at maturity. So in my example, I try to use the example of a friend so that we can bring it down for to make it very simple for everyone to understand. So I said, think of it as lending to a credit-worthy friend. Now, why did I lay emphasis on credit-worthy? Because for these fixed income investments, their returns are guaranteed. That is why I said credit-worthy friend. Now, some of them are credit worthy, some are not. But this time, you are lending to somebody that is credit worthy. So either you're lending to the government or you're lending to these corporations, they are credit worthy. So it gives you certainty on your investment that so long I invest in these instruments, I'm going to get my returns back. Okay, so let's move. My example, I said, think of it as lending to a credit worthy friend. Lend me 100,000 for a year and I will pay you 20% interest after 12 months, which is 1 year. So at the maturity, that means after 12 months, you're not just going to get your 100,000 back, you're going to get both your 100,000 and extra 20,000 naira. Why? Because you lent to this person borrowed from you, and either is the government or is a corporate organization, they have used it to their own advantage, they have benefited from it, and at the same time you are now also benefiting from it. So it's a win-win for you. Both the company, the government, and you is a win-win. Everybody wins at the end of the day. So instead of allowing your funds to like follow in a savings account, we have this instrument is a good instrument for us to put our funds, and at the end of the day we get good returns with peace of mind. Now, before I continue, I would like to talk about some of the difference between fixed income investments and other investments that are not fixed. And the major one is the fluctuation in prices that gives peace of mind. Now, when I say fluctuation in price, if you look at stock markets, if you invest in the stock market, after investing, your money can either go up or it can go down, which means that if it's going to go up within a certain period of time, it is not guaranteed. It could go up and at the same time it could go down, even if it is a company that has strong fundamentals. So the reason why you're investing in fixed income instruments is because you know that what you're getting back is guaranteed. Right from the time you're making that investment, you already know what you're going to get back at the end of the tenure. So that's one of the reasons and the differences between fixed income investments and other forms of investments. Okay, let's move on. So talking about fixed income investments, why do we invest in a fixed income investment, and who are the people that should invest in these fixed income investments? Now, one of the reasons to you invest in a fixed income investment is because it is safe and secured. If you look at, I'm going to be mentioned. Okay, so let me go ahead of myself a little bit. I would like us to mention in the comment section, since so many of us, I know some of us have started investing already. I can see some of my students in the comment section, so those that have taken my clients now, those have taken my one-on-one session. I have some of them in this comment section that I can see cite some of them already. So I would like to tell to ask us, what are some of those fixed income investments that you already know before now? So I want to see you in the comment section. Begin to mention some of those fixed income investments. While you're mentioning them, I'm going to be telling you why you need to invest in fixed income investments. And the first one, like I mentioned, I said it is safe and secured. Yes, so fixed income investment are safe and secure because there is guarantee on what is going to return. Take for instance, now I'm beginning to mention, I was waiting for us to mention, but now I have to begin to mention some of them. Take for instance, federal government savings bonds. You see that when you invest in, thank you very much, McN. Bonds, thank you. And we have different types of bonds. We're going to go into it. I'm going to try to manage our time as much as I can because we have a lot to cover and I want to take questions. I like to take people's questions because that is how you really know about all of these things. So I want to take questions. So while I'm talking, begin to prepare your questions. I'm going to take the questions after all of this. Okay, so like I said, it is safe and it is secured because your money, your return, both your capital and your return is guaranteed. Unlike so many other investments that sometimes even your capital is not guaranteed. If you invest in stock markets, for somebody like me, I'm well invested in stock markets. But even at that, there is no guarantee that as at a particular date, as at a particular time, this is what the stock market is going to return. Even when you know that if I stay long, if I stay for 5 years, if I stay for 2 years, after 1 year, I know it should return something. But you never can tell. What if there's a news? What if there's a policy? What if anything happens and it affects that particular company? The moment it affects that particular company, it's going to affect you also because you have bought a fraction of that particular company. It's a fixed income investment. They will return your money. The government will definitely, because federal government savings bond, treasury bills, most of all of these is investments that are, especially government bonds, they are backed up by the full faith or the federal government. So whichever way, they are going to return both your capital and even your interest. It is going to be returned to you. Now, I said they have little to no risk. Yes, most of the fixed income investments, they have little to no risk. We say little to no risk because for federal government savings bond, treasury bills, and all of these, especially all of these government bonds, is actually a no risk investment. But we usually say is little to no risk because so far it's not as if they have defaulted in any way, but at the same time, we just say it has little to no risk. So no risk involved, predictability at the beginning. When you are investing in this income, you already know what you're getting after the maturity date. And another one is anyone can invest. Anybody can invest in all of these things. I've made some other points on who can invest, so I will skip this point and move on to the next point. You can start with as low as 5,000 naira. So it doesn't matter if you have 10,000. If it doesn't matter if you are coming in with 5 million. It doesn't matter if you are coming in with 50 million. Even with 5,000 naira, you are good to go. You can start. And this is something that you can do yourself. You don't need to consult anyone. You don't need to meet anybody. Even at the corner of your room, you can invest in any of these fixed income investments. So most of these apps that we have now, they have made it so easy for us that irrespective of your region, irrespective of where you are, irrespective of your level of income, you can do this thing anywhere and it's very, very easy. You can do it on your own. You earn regular passive income. Now, some of these instruments return monthly, some return quarterly, some return biannually, some return yearly. We're going to look into it as we proceed. And another one is diversification. Now, you don't want to put all your eggs in one basket. As you're invested in lands, as you're investing in lands, you're investing in stock, you also want to diversify and not put all your funds in one particular basket. So what do you want to do? Depending on your age, I'm still going to talk about that. What you're going to consider to know how to sector your portfolio to know, okay, how much percent am I putting in this, how many percent am I putting in this, how many percent am I putting in this. So you don't want to invest, put all your eggs in one basket. You don't want to put all your investments in lands. You don't want to put all your investments in stocks. You also want to diversify, because these ones, fixed income investments, they are safe and it preserves your capital no matter what. So it's another thing is protection from unnecessary spending. See, fixed income investments has a way of helping people to keep their money safe. A lot of people get messages for urgent 2K, urgent 10K, urgent 50K. Now, if you are the type that you invest consistently, another point I wrote here is wealth habits. If you are the type that you have built the culture, you have cultivated that culture of investing regularly, urgent 2K will not is not going to affect you, because before the urgent message of the urgent 2K comes, you know that there's already a plan ahead to invest either certain percentage of your income, or you have a fixed amount that you're investing either on monthly basis or on every income that comes into you. And that's a good way. Let me just quickly mention that before I move. That's a good way. When you want to start investing, it's good that you automate your investments. Let it be deducted directly from your bank to wherever you are investing in. So you can issue a standard standing order to your bank, or you can set it yourself such that if it's on a monthly basis, if you are doing 100,000 naira on a monthly basis, you can easily move this 100,000 naira every month before anything eats it up in your account. So it protects your money from unnecessary spending. And I'm talking about wealth habits. It also protects your money from unnecessary Okay. I'm sorry for that glitch. I apologize for that glitch. I believe you can see and hear me now. So let me know if you can. I'm back now. I believe you can see and hear me now. Okay, so I apologize for that loss in connection. We try our best every time to ensure that some of these things don't happen, but it's still so much unavoidable because I use two networks every time I'm streaming, and this is still what we get. We'll keep trying our best to ensure that we are able to deliver without any glitch. So let me continue and preserve the remaining time we have left. Okay, thank you very much. Said I'm good to go. Thank you. So yes, you're good to go. So I was talking about why do we need to invest in fixed income investments? And I asked us that let's mention some of those fixed income investments we know in the comment section. I've only seen one person respond to that, but I will continue while I wait for your responses. Now, who should invest in fixed income investments? Now let's talk about this because there are reasons why people invest in fixed income investments, and the major reason is because of peace of mind. You know that when you invest in fixed income investments, you can go to bed and sleep soundly. There are some investments you make that you can't even sleep well in the night. If anything goes wrong on that investment, you land on the hospital bed. Not so with fixed income investments. That's why so many people love, thank you very much, Treasury bills. Yes. That's why so many people love fixed income investments. So now, how do you know if you should invest in fixed income investments? The first point I have here is if a conservative investor. Now, how do I mean conservative investor? If you don't like to take so much risk. Now that's okay. I don't want to go ahead of myself. I'm going to talk about that soon. So if you know you're a conservative investor that you don't like to take so much risk on yourself, you know that if you take risk and anything happens to either your interest or your capital, you're going to begin to take drip. You land on the hospital bed. Then fixed income investments is for you. So if you're the type that you like peace of mind, thank you, Dolapo. It's good to have you here. Abimbola, yes, he said federal government savings bond, federal government bonds, treasury bills. Yes, so many of us we are already familiar with some of these investments, but we need to know how to which one fits us because we have so many of them and we are confused about which one exactly to invest in. So that's why I'm here tonight and we're going to trash that out. So another one is beginner investor. If you are just starting out with investments and you don't have so much knowledge, fixed income investment is such that there's no need for guesswork. If you invest in it, your returns, you're going to get it. Unlike stocks, don't get me wrong. Like I said earlier, I'm well invested in the stock market. But unlike stocks, you could pick the wrong stocks if you don't check their books. You could pick the wrong stocks if you are not well informed. You could pick the wrong stocks if you don't have knowledge about those companies. But for fixed income investments, even if it's as low as 15%, if you are invested, there's guarantee that both your capital and your returns will come back to you at maturity. So if you're a beginner investor and you're just starting out, don't go for any high risk investments. Start with fixed income investments while you begin to gain knowledge about other forms of investments. So as a beginner investor, thank you very much, mutual funds. Yes. So as a beginner investor, you want to consider fixed income investment. Another one is if you're a working professional with busy schedules. See, if you're invested in stocks and you don't have time to check your portfolio from time to time, especially if you're doing this on a short term, you might just burn your fingers. But not so with fixed income investments. With fixed income investments, there's guarantee that your return will come back to you. So if you are busy, you know that you can't be checking anything from time to time. Once you're invested, at maturity date, your money is going to drop back in your bank account. If you're a low income earner, I imagine that you want to invest 10,000 naira. While it's good that you can start some high risk investment with 10,000 naira, but what if you just lose that money? Now, when I say what if you lose the money, another thing is what if you also make profits because it's always two sides of a coin. But if you're a low income earner, that small amount you want to put in still seems so precious to you. So instead of gambling with it with high risk investments, you want to start with low risk income investments like all this fixed income. Some of them still offer about 20 or even a little bit above 20%. So when you invest in these things and you are consistent, using the compound interest, use compounding your interest that comes afterwards. Before you know it, your portfolio grows, and when you want to delve into high risk income investments, then you can begin to try it out. So if you're a low income earner, you don't want to take so much risk on your investment. Another one is high net worth individuals. See, some of us don't know that when we talk about wealthy people, even though they are well invested in stocks and all these high risk investments, most people preserve their funds in this low income. If they have just 10%, most people are okay. Imagine that you are bringing 100 million into the market at 10% for 1 year. That's 10 million naira on returns. So this thing is a game of numbers. For you, it might look like if I invest 10,000 naira, I'm just going to get 1,000 naira. It looks small, but look at those that are coming in with 100 million and they're going to get 10 million. But if you're starting with 5,000 naira, it is good because you are a work in progress. Nobody started so much at the beginning. Every wealthy person started from somewhere. I know that some people have leverage, but we have so many people that have started without leverage and yet they are wealthy today. It's because they have inculcated the culture the wealthy people have inculcated, and that is start saving, and not just keep your money saved, but keep it saved in an investment portfolio. So either you're a low income earner or you're a high net worth individual, I tell you that fixed income investment is also for you. Okay, somebody said, can equity funds, oh, I can't get that, be considered as fixed income? Okay, no, equity, you can't consider equity as fixed income investment because the return is not certain. So any investment portfolio, any investment that the return is not certain, you can't consider it as a fixed income investment. Okay, because you said equity funds. Okay, now you're talking about mutual funds. That's mutual equity funds. It fluctuates, it's not fixed. Even if they promise 40%, if there is fluctuations in the market, as there's fluctuations in the market, there will also be fluctuations in your portfolio, even if you're invested in the fixed in the equity funds. So I can't call that a fixed income. I would rather call money market a fixed income. That before I move ahead. So when it comes to equity fund is under mutual funds, and money market fund is also under mutual funds. For equity funds, they are most of the higher percentage of their investments is in stocks. Stocks is what we call equity. For some of us that don't know, you either call it shares, you call it equity. You hear people call it shares, equity, and call it stocks. So for anything equity, it has to do with stocks, with the stock market. So a bulk of their investments is in equity funds. So anything that happens in the stock market also reflects in that sector, also it reflects in your equity bonds. So you can't call it a fixed income asset. Unlike money market fund, I'm going ahead of myself now. So let me just mention that so that we'll just leave it. Unlike money market funds, they have a bulk of their investments in fixed income assets. And because fixed income assets are stable, it makes the money market fund also stable. So that's the difference between equity funds and money market fund. So money market fund, we can call it fixed, but equity funds, we can call it fixed. Adams Afolari, I hope I've been able to clarify that. So who are the other people that should invest? I'm taking so much time now. Parents want to save for their children's education. If you're saving for a project, if you're a retiree, that you cannot joke with all you have earned in your 30 years of working. Instead of gambling with it and putting it in a high risk income investment, you want to put it in a fixed income investment and be satisfied with the little return that is coming. Or if you are diversifying your portfolio, you want to put a bulk of it in a fixed income investment while some of it in other high risk investment that can give you higher return as a matter of diversification. Students, individuals, corporates, organizations, or business. So like I asked earlier, now we should mention some of those fixed income investments. Now we have treasury bills. I'm going to be explaining them one after the other. We have treasury bills, we have government bonds, we have corporate bonds, we have money market fund, we have commercial paper. They are not limited to these. We also have high yield interest savings, we have fixed deposits, and so many of them. But I'm going to be talking about these five. If we have more time, I will talk about the rest of them. Now, before I begin to mention to explain each of those ones. What are those things you need to consider before you invest in fixed income investments? Now, if you can see my slide, before you invest in a fixed income investment, you have to do like a test on yourself. When you go to the hospital, what does the doctor do for you? They test you, they try to diagnose to know what is wrong with you before they give you any medication. The same thing applies to your finances. The same thing applies to your funds. Before you put your hard-earned money in any kind of funds, you want to do it, run a test on yourself. You want to ask yourself real questions. Why are you investing? What exactly do you want to do? What is the duration? There are so many questions you want to ask yourself. Now, I know that some of us, when it comes to drugs, we take over the counter drugs. We just go to the pharmacy, you tell yourself, when you know that, okay, it's just headache, it's just stomach pain, you go to the pharmacy, you ask for drugs. Some don't go to the hospital. Now, the hospital is like going to a professional, and the professional helping you to identify what all of these things have. But even if you don't want to go to any professional to do all of this for all of this diagnosis, this is something that you can do on your own. So how do you carry out this diagnosis on yourself to know the kind of investment that suits you as a person? So before we go into all the other explanation of those types of fixed income investments, let's carry out this analysis on ourselves very quickly. So many of us are going to get clarity tonight to know which one suits you as a person. So let's move ahead. The first thing is, I always ask, what is your why? Either is you are investing or anything you are doing in life, you always ask yourself, why am I doing this thing? Because the reason why you are doing it determines the outcome. The reason why you are doing it determines the effort you put into it. The reason why you are doing it has to do with every other decision that you make. So if you don't know your why, you won't know your what. You won't know what to do when you don't know why you're doing it. So let me ask us very quickly. For many of us that are here tonight, why do you want to invest? Let me see you in the comment section. Why do you want to invest? I'll continue to mention some while I wait for you to mention your own. So when you mention your own, I can help with some other things that can help you know which of you as a person. So why do you want to invest? Are you investing because you want to buy a car? Are you investing because you're planning for your children's school fees? Are you investing because you're planning for retirement already? Are you investing? So many reasons why people invest. Are you investing because you just want to have peace of mind? Are you investing because you don't just want the bank to eat up your money with bank because on bank charges? There are so many reasons why we invest, and the reason why we invest determines what we invest in. It determines how long the duration of this investment. Thank you very much, Mr. Nasiru. He said for capital growth. Now, that is a very strong reason to invest, because we can't continue to work and work all our life without making our money work for us. Everybody that wants to be wealthy should not think of active income alone. We should begin to think of active income and passive income alongside. So when you're thinking passive, you're also thinking of something that can grow your capital, something that can grow what you have worked for. So you don't want to work all your life and still work in your old age. Even when you're working in your old age, it should be because you enjoy what you're doing, not because you're chasing after funds. So how do you have good retirement? Somebody said for passive income. Yes, it could be because what you have at the moment is not enough and you need something to be returning to you either monthly, yearly, or at intervals. So it could also be for passive income. Somebody say growth. Okay, I guess it's saying for growth for long term. Yes, for long term. So we have different reasons why you're investing. So the reason why you're investing has a long way to go with the kind of instruments you will invest in. Now, another one is duration. I can say that somebody wrote in the comment section that long term. While somebody wants to invest for long term, another wants to invest for short term. So if your target is 6 months, you cannot invest in federal government savings bonds. If your target is 6 months, you cannot invest in sukuk bonds. So there are some instruments that you can't invest in if you have a short-term view, while there are others you can invest in if you have a long-term view. So your reason for investing determines the kind of portfolio you build. So if you're on short term, some other ones are already off the radar. You can't invest in them. Why? Because you have a plan, you have a goal. You're looking at 3 months, you're looking at 6 months, you're looking at 2 years. Then you have to limit it. You have to sieve it to remain those instruments that is only limited to 3 months, 6 months, 90 days, 1 year, 2 years. So that is how your reason for investment can affect the duration and the particular instruments you invest in. Another one is your risk appetite. Now, let me explain risk appetite very quickly. Now, for this slide alone, I already have a full video, full explanation on how you can carry out this diagnosis yourself on yourself. So after now, you can go back to my YouTube channel and look for that video. It's a beginner investments beginners video. You can look for that video. It explains all of these things that I have here so that we won't dwell so much on this, but I'll explain just very briefly. So by risk appetite, what I mean is if you are seeing a slim person with a big bowl of food before them and they are ready to devour this food, they are ready to eat the food. Sometimes you wonder, can this person really eat this food? Can this person really finish it? But there's a saying in Yoruba that Ojulo Monto Yono, that means is what is your eyes that can tell how much food you can take in. So when you have the plate of food before you, your eyes can tell you, with what you're saying, you can tell that, okay, I can either finish the food or no, I can't completely finish this food. So you know what your risk appetite is. You know, okay, I want to take a big risk. But the matter is, when you take the big risk, can you manage it? So it's one thing to be able to take risk that, okay, somebody comes to you that, okay, there's this investment, is 100%, you get 100% interest after you invest, and you're cool with it, like, okay, let me put 2 million, you put 2 million. But what if the 2 million, both the 2 million and the return does not come back to you? What happens to you? That's where your risk tolerance comes in. So many people have large appetite for risk, but they can't manage it. The same way some people can eat a big bowl of food and afterwards they run to the toilet. So before you go into any kind of investments, check it. Can I manage the risk? If anything happens to these funds, maybe is you have certain amounts that you want to use to pay your children's school fees. Now the children are resuming next week now. And you want to put that money in an investment, let's say 3 months back, and somebody is offering you 100% returns on your investment, you have to ask yourself, if I lose this money, automatically my children will not be able to pay their school fees. So you have to check yourself, what if anything goes wrong? Can I manage it? If you can't manage it, that investment is not for you. You want to consider something that is certain, like a fixed income investment. So check your risk appetite. After checking it, check your risk tolerance. If anything goes wrong, can you manage it? If you can't manage it, stay in fixed income investments. Okay, somebody is saying, what is the difference between FGM bonds and FGM savings bonds? Okay, I will go to that. Don't worry. So can we move types of fixed income? Okay, I'll still go to that. I already have all of that, so never mind. So risk to reward assessment. Check. If this thing is offering me a higher risk, then it means it's offering me a higher return. If it's offering me a lower risk, it means it's offering me a lower return. But which of them can you manage? Another one is your age. See, our age matters a lot to the kind of investments we're going to make. Now, I can imagine that somebody who is in his 70s putting all his investments in the stock market, or all the investments in maybe real estate, or all the investments in crypto or forex. What if anything goes wrong? And that's where diversification comes in. So for somebody that is more elderly, you want to put less of your funds in a risky investment and more of your funds in a fixed income investment that is guaranteed. You know that there will be returns on it when you're diversifying. But as a young person, if you're in your 20s, if you're in your 30s, you still have time. You still have time to move in and out of all of these stock markets. If you have money from stock markets, you can begin to move it gradually into fixed income assets. So your age has a long way to do with the kind of instruments you also invest in. And investment platform, okay, I'm going to talk about all of those later. Now let's move into it properly, starting from treasury bills. So what exactly is treasury bills? Like I said earlier, Majorly, every fixed income investment, they are debt instruments. But for treasury bills, they are debt instruments that is issued from the CBN and by the CBN for the government. So it comes out through the CBN, but is from the government, and now is backed up by the full faith of the government, because the government will always return both your capital and your interest back to you. Now, how do you invest in treasury bills? We have the primary market and we have the secondary market. For this primary market, you have to come in with a minimum of 50 million naira. And if you're investing in in the secondary market, now what it means by primary market and secondary market is that for primary markets, those that institutional investors that can afford to buy up to 15 million, they buy these treasury bills from the government, and they begin to now sell back to retail investors. So for you and I that we don't want to buy up to 50 million, we don't want to invest up to 50 million with them, we can now buy as much as 2 million, 10 million on the secondary market. But with as little as 5,000 naira, you can invest in treasury bills on the secondary market, and is liquid. You can easily sell. Now, when we are talking about treasury bills, unlike some other forms of investment that you get both your interest and your capital at the end of the maturity date, for treasury bills, immediately you're investing, you are getting your interest immediately. So you are investing at a discount. Now, let me explain. If you're investing, let's say 10 million naira, and the interest is 20%, it means that you're getting back your 2 million naira immediately, then 8% will be invested. So at the end of the tenure, when the tenure is to expire, you now get back your 10 million naira. Isn't that beautiful? So we can see that investment is a game of numbers. But it doesn't matter where you're starting from. The matter is start from where you are. It's a marathon, it's not a sprint, it's a journey. So it doesn't matter where you're starting from, just start from where you are. Start first. 5,000 starts, 10,000 starts, 100,000 starts. It's a journey. So it's a game of numbers. The more money you bring into this market, the more return you get. All right. So let's also move. I said for primary markets, you can start. Okay, for primary markets, you can start with. For some, they accept 5,000. For for some platforms, 100,000, depending on the platform you're using. And for secondary market, I said 50 million. Now, for treasury bills, the rate is gradually getting lower. It used to be up to 25, 24, 23%, but now the rate is gradually reducing. I think the last one we had in the primary market was below 20%, it was like 17%. But for some others, if you check some platforms, if you check iInvest, for instance, you still see the treasury bills of about 20% and a little about above 20%. So depending on the platform you're investing in, you can have different rates. So before you invest, you want to check the platform you're investing in, whether it's your commercial bank or you're using a particular app. Check their rates, check their terms and conditions, because these are some of the things that people don't check. Ask people, okay, which platform is okay. The matter is, what is okay for you might not be okay for me, because our reasons for investing is different. So check their terms and conditions if you're okay with it before you put your money in that particular app or the commercial bank or your broker. So check their terms and conditions, check if it's okay for you, and check their rates, compare rates to rates, and you know which one you want to pick. I wrote it that we have some apps you can use. You can use broker, you can use your stockbroker, you can use commercial banks. But I'm going to continue for all of these things. I still have that will talk about it. So I just want to move because of time. Now I wrote an example here, that's treasury bills. Now, like I forgot to mention this, that they are short-term instruments. Now, you know, when I was explaining the other time, I was telling us that our time horizon matters. For some people, they want something for short term. For some others, they want something for long term. Now, treasury bill is a short-term debt instrument. So if you want to invest for 90 days, you'll find yourself here. If you want to invest for 180 days, you find yourself here. If you want to invest for 364 days, 1 year, you find yourself here. And sometimes, even when you're investing in the secondary markets now, you even find as low as 61 days, 41 days, less than 2 months. So that means you can just quickly turn your money invest this, fix your money for a short period of time, make quick returns, return it again, make quick returns, instead of allowing your money to just lie fallow in that bank account. I know some people will say that, but what of inflation? The matter is the same inflation that is going to affect this thing is the same inflation that will eat it up in your savings account. So please, let's take away the myth of what of inflation, that will inflation not eat it up. The same inflation will also eat it up in your savings account. So please cultivate the habit of investing and making your money work for you. All right, let me move very quickly. So please, if you have more questions on treasury bills, because I still have a lot to talk about, so I'll move gradually. So please, if you have more questions, ask me any question. Just ask me any question you have. I'm going to respond to your questions. Now, I'm going to talk about bonds. I'm going to group all the bonds together so that we can make good use over time. Now we have different types of bonds. We have both government bonds. Somebody was asking the other time about, let me see if I can locate that question again, about the difference between federal government bonds and federal government savings bonds. So I'm going to explain that. And he said, can we move to the types of fixed income? Okay, so that's what I'm doing already. So now we have different types of bonds. We have both government bonds and we have corporate bonds. So from the word government, it means that it's the government that is issuing these bonds. Now, when it's corporate, it means that it's not the government, they are corporate organizations, they are companies. And now what do you do with these bonds? This bond is a way of lending to these people. Either you are lending to the government, like I said earlier, or you are lending to a company. So when you are lending to a company, instead of a company going to the bank to borrow money, funds from the bank, they can come to you and I through these corporate bonds and borrow from us. So they use it for what they want to use it for, and they return the money back to us with interest. The same thing goes to the government. So I'm trying to help us to understand the difference now. As I'm talking about it, you'll be seeing the differences between corporate bonds, government bonds, and the different types of bonds that we have. So that settles the issue of corporate bonds and government bonds. One is issued by the government, the other is issued by companies. Now, for government bonds, we have different types of bonds. We have the federal government savings bonds, we have the federal government bonds, we have sukuk bonds, we have different types of bonds. But I'm going to major on federal government savings bonds and federal government bonds, because if you know those two, all the other bonds related to it. Did I lose my network again? Did I lose my network again? Okay, I think I'm back now. Let's continue. So where did I stop? I said we have different types of bonds. So for the government bonds, I said I'm going to limit to 9 sessions to the federal government savings bonds and the federal government bonds. So now when we talk about federal government savings bonds, the major difference is that for federal government savings bonds is a short-term debt instrument. It's just between 2 years and 3 years. But when it comes to a federal government bonds, it's for a longer term. It's between 2 years and 30 years. They could issue it for 2 years, they could issue for 10 years, they could issue for 30 years. It's a long-term debt instrument. Unlike the federal government savings bonds, that is a short-term debt instrument. Can you see why I said that? The reason why you're investing and the duration of time you want to invest can determine the kind of instruments you invest in. So if you want your funds, your money back in 2 years or 3 years, you don't have a business with federal government bonds if they issued it at 10 years or 30 years, because you don't want to lock your funds for 30 years. But if you are satisfied locking up your fund for 15 years, for 30 years, depending on the number of years for which the federal government bond is issued, then you can go for it. But if you want to limit the time you want to invest in it, maybe you are concerned that, okay, in the next 30 years, what if the money is already useless? What if inflation has eaten it up? If you want to clear your what ifs, you can stay with federal government savings bonds. It's a short-term debt instrument and it's just within 2 years. It's only for 2 year tenor and 3 year tenor. So now, how does federal government savings bonds work? Now, so for federal savings bond is okay. So I won't waste time on that. I have a comprehensive video on federal government savings bonds already on this channel. So after now, you can just go to my channel, look out for federal government savings bonds explained on my channel and watch that video. Now, in that video, I have a step-by-step guide. How you invest, the app you will use, how you will use the app, everything is already on that in that video, so that I won't waste time on that. So please, let's move from federal government savings bonds, and I'll just talk a little about it and move. So if you have any question on, if you want to invest in federal government savings bonds, I have a full video on that. Just go and watch it. It's well explanatory. I promise you that it's well explanatory. So, but I will just touch on it for those that will not go back to it. So for federal government savings bonds, you get your returns every quarter. By every quarter, I mean you get your returns every 3 months. Say for instance, let me use an example to help us understand very well. If you're coming into the market with 10 million naira, it means, and let's say now as for September, the last bond that was issued was around 15% to 16%. Now, if it's 2 years, it's about 15 point something percent. If it's 3 years, it's about 16 point something percent. But note that it's not fixed throughout the year. When I mean it's not fixed throughout the year, is per month. Federal government savings bond is usually issued every month. So the rate of each month differs. For January, I think it was around 18-19%. Now we're in September, it's about 15-16%. So the percentage for each month differs. But once you are invested in it, your percentage does not change. Your return does not change. If you have done the one of January at 19 point something percent, your return is still going to be for that 19 point something percent. So if you are investing for September, that is about 16%, your return will also be that 16%. If October is less than 16%, it means what it will return is what the rate month. So this comes out every first Monday of the month usually, and it's issued by the debt management office. So let me move quickly from that federal government savings bond. Okay, I was trying to explain that if you invested 10 million naira in the federal government savings bonds at 16%, it means that your return is 1.6 million naira per annum. Per annum means per year. Now, this 1.6 million naira is going to be divided by 4, which is 400,000 naira, and it's going to be paid to you quarterly. So which means if you're investing now in September, by October, November, December, by December, you get your first return. That means by December, you get 400,000 naira. By March, you get 400,000 naira. By June, you get 400,000 naira. By September, you get, and your initial 10 million naira. So that's the way federal government savings bonds works. But what of federal government bonds? Now, the way federal government bonds works is, another difference between federal government savings bond and federal government bonds now is, for federal government savings bonds, it's usually for retail investors. For federal government bonds, is for institutional investors. So with federal government bonds, your investment should be up to 50 million naira before you can invest in federal government bonds on the primary market. On the primary markets, you are coming in with 50 million naira. So it's usually for institutional investors, and they pay biannually. That means they pay their interest twice in the year, and it's a long-term debt instrument, unlike the federal government savings bonds, that is a short-term debt instrument. So who has that question? Abimbola Ojo, did I answer your question? So that's talking about federal government savings bonds and federal government bonds. And Suku bond is just similar to that federal government bonds. So let's talk about corporate bonds now. So like I've explained for government bonds, corporate bonds are also similar, and the major difference with corporate bonds is that they are issued by companies. They are not issued by the government, and they're also issued for institutional investors. So institutional investors invest in corporate bonds, and it's also a long-term investment. So that's the major difference when it comes to all of these bonds. So if you have further questions, please, I will be more than glad to respond to your question. Optimistic, thank you for your kind words. He said, my beautiful, wise financial woman watching from Ghana. I have people from all over the country here tonight, different regions, from Italy, from US, from South Africa, from Ghana. It's good to have everybody here. And it's good to know that we are making moves to let our future self say thank you to her. now self. All right, so let's move into money market funds. So what when we talk about money market funds, I know initially I've touched on money market funds, but I will explain now. So money market funds is under mutual funds. I know most people have heard about mutual funds and they have heard about money market funds, and they keep wondering, is money market fund and mutual fund, is this, are they the same? Let's break it down. So when we talk about mutual funds are, okay, let me use this. Some of us, we have heard about what people call ajo. When they say ajo, that means it's like a contribution. People contribute that money and they bring it together. At the end of maybe 1 month, somebody goes home with that contribution. Mutual fund is not directly like that, but it's synonymous to it. So with money market fund, with mutual funds, I beg your pardon, with mutual fund is the pooling of resources together. Different people put money together from different, just like all of us, we are on this platform tonight. We can bring money together without knowing ourselves. We are using a single platform, so all our funds come into that particular platform. Now, what happens is when the funds come in, professional investors, they now pick this money and they put it into instruments and invest for us. But the matter is, under mutual fund, we have different kinds of mutual fund. So many of them. We have equity funds, but tonight is not for that. All, what we are just looking at is the fixed income part of it. We have equity fund, we have money market fund, we have balance fund, we have ethical fund, we have so many of them, we have so many types of mutual funds. But tonight what we are looking at is money market fund, and that's because the money market fund falls under the one that is the fixed income instruments. So now when we are talking about fixed money market fund, what does this invest in? Money market fund has majority of its investments in fixed income. That is why we can categorize it as one of those fixed income assets. So money market fund is invested in federal government bonds, they're invested in federal government savings bonds, they're invested in treasury bills, they're invested in majority of all these fixed income assets. So what money market will return to you is almost certain. Now it fluctuates a little from time to time, but not a wide range of fluctuation. So if they are returning 20%, it could fluctuate between 19 and 21%. But you know that at the end of the year, you're still looking at an average of 20% on your investments if you're invested in the money market fund. Now let me tell us something beautiful about money market fund. When you're invested in money market fund, your returns comes in daily. You get daily returns. If you are invested in the money market fund, let me see you in the comment section. I want to see those of us that invested in the money market fund. Let me see you in the comment section. So the beautiful thing about it is you get your interest daily. The same way you can log into your bank account and you see what is going on in your account is the same way you can log into whatever app or whatever platform you choose to use, and you see your daily returns in your money market fund. When it comes into your account, you know the joy it comes with. Sweet money. When your sweat money makes you sweet money, that's money market fund for you. You just see money dropping every day, interest accruing every day. But one thing with money market fund is that depending on the platform you're using, your fund has to stay in the instrument for a minimum of 15 to 30 days. For some platform is 30 days. That's why I will always tell us that whenever you want to invest with any platform, please read their terms and conditions for them to know if you want to invest with them or you want to choose another platform. Yes, thank you very much, Ola Dapsi. Pastor Shegun, they say, I have invested in money market fund. That's very good to know. Okay, so Babalayo said, can federal government bonds be cashed anytime, even if one chooses 3-year duration? Okay, let me quickly answer that question before I move. So for federal government, okay, federal government bonds, now, yes, you can get your federal government bonds, but not without penalty. So let's say you are invested, for federal government bonds now is semi-annually. That means you get your returns twice in a year. If you have gotten your first returns, that's already gone. But for the remaining one that you have not gotten your returns, you'll be charged like a penalty for withdrawing your funds before maturity. maturity. So yes, you can cash out your money, but not without the penalty of not reaching the maturity date. So I've answered that question. Let's go back to our money market fund. So a minimum of 15 to 30 days, but I prefer to put it at 30 days because the 30 days is the longer one. And one thing about money market fund that is also beautiful is that after your money has sat in that particular instrument for 3 months, the interest on it begins to generate its own interest. Let me give an example. Let's say, for instance, you invested the money market fund with 10 million naira, and okay, let me be more realistic now. If you for somebody like me, I use the Stanbic IBTC for my money market fund. So if you put 10 million naira in your Stanbic IBTC on a daily basis, it will return about, let me do the quick calculation now. It returns it will return about 5,500 to you every day, every blessed day. You get about 5,000 plus return on your investment. So after 3 months, now that's 5,005. Now that's the least. It's actually more than 5,005, but I don't want to exaggerate so that we can put our minds on the barest minimum. So this 5,005, if you calculate it for 90 days, whatever it gives you, it's added up back to your initial 10 million naira, and your interest begins to return on the total amount. So the beautiful thing is that it compounds. It's not just a continuous 5,000, 5,005 every day. Now what you have is a compounding interest. And I tell you, anybody that you see that is building wealth, they have mastered the art of compounding their interest. If we still have time tonight, I can delve into it, but if we don't, I will have to just mention it and let us do the rest of that on our own. So I've talked about money market fund. Okay, so money market fund could be, you can take your funds back as early as 30 days. If you bring 30 days for passive income, let's say you're already a retiree and you have 15 million naira. If you bring a 15 million naira into the money market fund, okay, let me use 30 million. It will return a little about 4,000 to you every month. So if you are the type that you want to retire with money market funds, once that funds is in that instrument, every month you can take out your interest on it, and your initial capital can continue to generate more interest. So once it's up to 30 days, you are going to, oh, network again? Did I lose my network? Did I lose my net? Okay, I think we're back. We're back on the network. Let me know if you can hear me. Please let me know if you can hear me. What is going on? Please let me know if you can hear me in the comment section. I think there's a break transmission. If you can hear me, and I will take it up from where I stopped. If you can hear me, just type, I can hear you. I'll take it up from where I stopped. What's going on? Okay, thank you very much. Lincoln said, I can hear you. Proceed. All right. So since you can hear me, I'll proceed. Let me take that question quickly. Muiwa said, sorry to ask this question. Please, you don't have to be sorry to ask any question. I'm here because I want to answer those questions. So please feel free to ask me any question you want to ask. You said, is it possible to invest in treasury bills and federal government bonds at the same time? Absolutely. Very fine. If it aligns with your goal, like I said earlier, that you have to know your why. What's going on? So, like I said earlier, that you have to know your why. If it aligns with your goal, then you can go ahead and invest in both treasury bills and federal government bonds. federal government bonds at the same time? Yes, you can. But don't forget that Treasury bill is a short-term debt instrument. Federal government bonds is a long-term debt instrument. So you have to be sure that that is really what you want to do. So I was talking about money market fund before that happened. I was trying to, I think I've talked about the example. I talked about how much it returns. Okay. So, and I've talked about compound interest. In that case, let me move. Let's go to, okay, somebody said, I can hear you, but it's cracking. Please, can you confirm for me that, can somebody else confirm for me if it's cracking? So we'll know if it's from your own hand alone or it's from my hand. Because I want you to hear and I want you to understand me. So we are moving to commercial paper. Please confirm for me. Said I can't hear you is cracking. So somebody else should confirm for me. Can you hear me? Is it cracking or is from just from his own hand? Before we move to commercial paper. Please can you confirm for me if you can hear me? Nobody's responding to that. But let me move. If there's a glitch, I know I will get the response. So moving to commercial paper, like I've been saying earlier, all of these instruments, they are debt instruments. Is either by the government or by by corporate organization. The difference is either is short term. Thank you, CIF Academy. Is either is short term or is long term. So talking about commercial paper, they are also debt instruments. You're also lending, but this time around is not to the government, is to a corporate organization. So instead of these companies going to the bank to get loans from the bank, what they do is they issue a bill to you and I for those that can afford to invest in them, especially institutional investors, to come invest in them. They take up the money, you will lend them, they borrow from us, and they use it for whatever they want to use it for. And at the end of the tenure, they return both your capital and your interest. Now, is a short-term debt instrument is a short-term debt instrument. It could be for 30 days, it could be for 90 days, 180 days, or 364 days. So usually between 1 month and 12 months. But for commercial paper, the minimum is 5 million naira. So if you don't have up to 5 million naira, you might not be able to invest directly in commercial paper, but not a problem. If you're still interested in investing in commercial paper and you don't have up to 5 million naira, like I said the other time, that money market fund is pulling on by professionals. These professionals take it and they invest it for us. They put it in other fixed income assets. So for those institutions, for these professionals, commercial paper falls into one of those instruments they also invest in. So if you cannot afford that 5 million naira at a go to put in commercial paper and you want to invest in money market fund, then somehow indirectly you're already invested in mutual fund. Okay, so let me move. When is the maturity? The maturity is at the end because it's a short-term debt instrument. So, like I said, that short-term debt instruments issued by companies, usually large and financial stable ones, yes, to raise money for their business operations. Yeah, so I said instead of I've mentioned all of this already, so I don't need to go back to it. So let's talk about the benefits. Now, many times commercial paper, the rates of commercial paper is usually higher than the treasury bills. And with this is not without a risk. So if you want to invest in commercial paper, is not totally risk-free. Unlike treasury bills, government bonds, federal government bonds, commercial paper is not totally risk-free. You know, we've been talking about treasury bills and bonds, and we're talking about that it's risk-free, it's stable, is little to no risk. Not with commercial paper. But you can invest in commercial paper when you know the credit rating of that company. If Dangote is issuing a commercial paper, you can be rest assured that okay, it has the capacity to return. But if one company that you don't know about is just issuing a commercial paper, what you want to do is make inquiries on that company and check for their credit rating. When you see that their credit rating is A plus, AA plus, I how do I explain that? When you see that they have a good credit rating, then you can go ahead and invest in them. But if they don't have a good credit rating, you don't want to gamble. don't invest in it except they have a good return. But it has a good return. Sometimes you have about 24%, 25%, many times above 20% return on this particular instrument. Okay, so that's that with commercial paper. If you have further questions, so that we can move into how to get started with all of this, because I know this is what many of us are waiting for. We want to know the requirements and we want to know how to get started with all of this. So I've put all the requirements together in one. For any of the ones that you want to invest in, the requirements you need are either this or very similar to this. Not most often than not outside all of these things that I've put here. Now, I have your KYC. Your KYC just means your personal information. Please, for the sake of time, if you are using your phone, you can just do a screenshot of this so that if you want to invest in any of the instruments, you know that these are the requirements you need. KYC, they want to know about you, your nationality, your date of birth, signature, passport, your marital status, just those informations about you. Utility bill of your residence, where you are living, they need either a waste management bill, an electricity bill, just any bill to show that the particular address you gave is where you actually live. They need your valid ID card. Either it's your NIN, international passport, driver's license, voter's card. They need your bank account, because when they are to return this particular when they are to return the interest on this your particular investment, they need a bank account to return it to. So your bank account will be needed, and your contact details, your email, your registration, your phone number. Most likely from January 2026, we will now be needing our TIN. At the moment, you don't need it, but we have to be up to date with all of those things. If you are not invested now and you want to start investing from January 2026, most likely you're going to be needing our TIN. Now, let's move to the platforms to use. What are the platforms to use for all of those instruments that I've talked about? Please, I'll come back to our questions. I want to quickly round up with this, so I'll just take all the questions together. Now, for all of these instruments, you can either use commercial banks, most commercial banks, you can use your stockbroker, and you can use an app. I know most of us will find the app very easy, so we can use anyone that suits us. You can do a screenshot also and check what each of these people offer. They don't offer the same thing. They offer different things. Some will offer some, others will not. But most of your stockbroker, you have them offering a lot of those. So for investment platforms, Atlas Portfolio, that's a stockbroker. Now, to know the list of stockbrokers, you need a registered stockbroker. So if you need a list of the stockbroker, just go to the NGX site, type on Google, NGS website. Go there, check for the list of registered stockbrokers, and you can pick any stockbroker of your choice. But these are just a few that I've listed. We have Atlas Portfolio, Stanbic IBTC, Afri Investor, Heavy Quest. You can use Morgan Capital, so many of them. So if for those of us that are already investing, please let's just type in the comment section some of those apps, some of those stockbrokers we are using, so that others can benefit from us. So write the app you're using or the broker you're using and what you do. So if it's Atlas Portfolio, just write Atlas Portfolio stocks. If it's federal government savings bonds, just write I invest federal government savings bonds. If it's mutual funds, just write Stanbic IBTC mutual funds, so that other people can learn from what you are already practicing. Now that's for you that you're practicing. If you have not started, please don't type. So for those that have started, please type in the comment section so that others can also read and know what they can do. Because time is not our friend. We have gone over 1 hour already. All right, so other apps that we have is iInvest, we have Bamboo, we have Optimus, we have Invest Niger. Yes, thank you, David. You said I invest for treasury bills. So people are beginning to respond. Please let's respond in the comment section. I want people to benefit from us also. Let's be our brother's keeper. Abubakar Idris says stocks app security. Stocks app security for stocks. Yes, thank you very much. So we have Invest Niger, we have Chaka, we have Optimus, we have Bamboo, we have Invest. They are not limited to this. We have quite a lot of them, but you can just screenshot these and make more inquiries on your own. And having said that, I've given us what the requirements are. So with the requirements, you're good to log in and you're good to start. Thank you. I'm using Meristem for stocks and mutual fund. Thank you. David Alabi said, invest Niger for federal government savings. Well, thank you everybody for responding. So for those of us that are already doing this, let's keep flooding that comment section. Let people benefit from us. Thank you. Chuku, I'm going to pronounce this. Chuku Nomso. So merit trade. Yes, that merit trade should be for your stocks. I believe they offer more than that, but I believe that's for your stocks. All right, so let's move. Carry wise, I believe, for your mutual fund. Yes, so we have a lot of them. I didn't write carry wise here, but you can see that we also have carry wise. Somebody said invest now. Yeah, invest now. We have Chapel Hill, a lot of them, a lot of them. Now, moving to the law of compounding, let me see if I can quickly take us through this. This is something I want I want us to benefit from tonight. I want us to learn about compounding. So I'm going to try to share my slides on this. I'm going to log on now to a different site. I want to show us the importance of compounding. But before I show us the importance of compounding, let's talk about compounding. What do we mean by compounding? In a layman's language, compounding is your interest making another interest. So when you plant a seed and you get fruits from that seed, you can also pick those fruits again and replant them so that it can bring in more fruits. I hope you understand me. So if you plant a single mango tree and the mango tree returns 100 mango fruits, you can plant these 100 mango fruits. Now, when you plant these 100 mango fruits and it returns another 100, that's 100 times 100. So that's a law of compounding. And this is something that is useful for our wealth journey. If you are not compounding, your wealth journey is going to be slow. If you want to be fast and far and move further on your wealth journey, you can't ignore compounding, the law of compounding. Thank you, Baba Layo. Coronation for stocks, carry wise for. So we can see that a lot of them, City Trader, thank you very City Trader is also Atlas portfolio. Thank you. So let me move from that. Let's just continue to say that in the comment section. Let everybody benefit from that. So talking about this law of compounding, I want to open, I want to try to open, I'm going online now. I want us to learn the power of compounding. So what I want to use now is I'm going to search for interest calculator now. So if you are there, you can just check, you can just type interest calculator if you can on Google, type interest calculator. You're going to have to do this together because for some people, you're thinking, I just have 5,000 naira, I just have 10,000 naira, I just have 50,000 naira. And to you, that amount looks like it's small. It looks like that amount is so small. But the matter is, I want to show you the power of those little funds in a long term, because when you think 2,000 is small, when you think 5,000 is small, when you think 20,000 is small, it's because you're thinking short term. If you're looking at the long term, you realize that it is not small. So I want to show us what this means long term. Okay, yeah, so we can see them. So we have interest calculator. So I'm sorry, I'm trying to go to my interest calculator. Let me see if I can use the GT. So I want to show us the power of compounding, because those little funds, I tell you, lose it today until you have done it for 10, 20, 30 years. Somebody said I can't see your screen clearly. Is that so? Oh, is there a net? So I believe you can hear and see me now. Okay, so like I was saying earlier, that please somebody should go to Google. I need you to type interest calculator. Now, when you type interest calculator, what I need you to do for me is it will give you initial. I want everybody to do this. This is our class work for today before we continue. We are almost rounding up before I take our questions, but this is a game changer. So I want us to do this. Everybody go to your Google, type interest calculator. I'm using the GT Co interest calculator. If you want to use the same thing I'm using the GT Co interest calculator. Somebody said you can't see me again. Is that so? Okay, let me bring my screen. Let me bring up my screen now. Let me close this and bring this. Sorry, my apologies. I want to carry you along with what I'm doing. I want us to see the screen. So that's the reason for this. I don't think it's network issue now. If you can hear me, then it's not the network issue. I want to show us something that is a game changer, even if you are a low income earner and you want to invest something very small in the market. So yeah, this is what I want to show us. Now, this is a game changer. I'm using the GT Core. Okay, I think you have my screen now. I'm using the GT Core interest calculator, and I want to show us the power of compounding when we are compounding our interest. My screen is still not up. Screen now. Please, can you see the interest app I have here? I'm seeing it here, but it doesn't seem to be showing online. Oh, good, good, good. Okay, so let's move on. All right. So I'm using the GT Core interest calculator. And what we want to do is, if you're the type that what you think is just 5,000 naira you have or it's 10,000 naira you have on a monthly basis, I want you to see what it will become in 5, 10, 20, 30 years. So most people that work with the government parastatal, you see that they work for about 30 years. And after 30 years, all they come back with is pension and gratuity. I want to show you how you can pay yourself your pension, how you can pay yourself your gratuity, and your gratuity will pay you your pension on monthly basis without depending on the government for the stipend they will pay you at the end of every month. So what do you do? Let's use 10,000 naira. I believe that a large number of us will be able to afford saving 10,000 naira and investing it in a particular instrument, even if it's money market fund. So I'm going to be using the money market fund now, and I'm going to be using 20% because on the average is about 20%. So we're going to work with 20% and we're going to work with 10,000 naira. So how much would you like to start investing with? I want to start with investing with 10,000 naira. Can you see what I'm doing now? It's an additional investment contribution. I'm going to put 10,000 naira because this is something I want to do every month. So I'm going to put 10,000 naira. I'm coming. Let me cancel every other thing we have first. So there's no confusion. So let's take this calculation together now. My initial capital is, how much would you like to start investing with? 10,000 naira. Additional investment contribution, 10,000 naira. Frequency of investment contribution, monthly. I want to invest monthly. Okay, so let's move ahead. It said expected rate of return. So I'm expecting 20%, and that's annually. How many years would you like to invest for? Let's invest for 30 years, especially those people that are government workers. Many of them, they work for about 30 years before they retire. So let's try 30 years. I want us to see the power of the compound interest. It's a compounding frequency. Now, even though money market funds compounds every quarter, I want us to use yearly so that we have the barest minimum amount. Let's use the least. So let's use annually. It should just compound once in a year. It should not compound every quarter. So we're going to go with annually. Now, what is the return of 10,000 naira invested on a monthly basis? Let's see that result. How many of us are calculating? If you have done your calculation, let me see you in the comment section. What is it that we are looking at? We are looking at this is 1, 2, 3, 1, 2, 3, 2, 3, 2. So you are at the end of your 30 years, your 10,000 naira will have become 232 million naira plus. Now, if you calculate 10,000 naira every month for 30 years, it will have given you 120,000 times 30. Somebody should do that quickly for me. What is 120,000 times 30 naira? 120,000 times 10 will have given you 1.2. So it should have been 1.2 times 3, which should be about um 3.6. But can you see the power of compounding interest at the end of 30 years? Instead of coming back with 3.6 million naira, if you are saving in your bank account, you are coming back with 232 million naira. That's the power of compounding interest. Please let's I want us to confirm it. You can do that also at your end. So if there's something that you have planned also, if you want to do for 100 million, so you are planning to become a billionaire and you think it's impossible, it's possible. If you have done it on 100,000 naira, it should have returned 2 billion plus. So the higher, the more money, the more funds you pump into it. I've told you, investment is a game of numbers. So the more funds you pump into it, the more it returns to you. So let's go back to our side. That's talking about compounding interest. I've explained what compound interest is to us now, and we want to go back to our slide. So let's go back to our slide now and conclude so that I can take our questions. All right. So, like I've explained to us about the law of compound interest. So finally, I said, do you know that while others are complaining about inflation, so many times when you want to invest in treasury bills, invest in all those fixed income assets, a lot of people will tell you that inflation will eat it up. This will eat it up. It will do this. It will do that. But what of your bank accounts? Inflation no reach your bank account. Inflation will also eat it up in your bank account. So while others are complaining about inflation, because you are smart, you know how to use your money to your advantage. You know how to compound. You are not just investing and getting the returns. You are also compounding what your interest has, what your capital has returned, the interest it has returned. You are also putting it back into this financial instrument so that it can return more to you. So by so doing, it helps you to build wealth very quickly. Now I leave you with this. Don't just come here and spend 1 hour, 30 minutes, 2 hours listening to me. What I want from you, the only way you can reward me and reward your future self is to take action immediately. Let your future self thank you. So I want you to take action immediately. Don't just come and listen. It looks sweet, it looks beautiful, but your 1,000 naira can get you started. So your 5,000 naira can get you started. So please, I want us to start after now. So if you're in the comment section, tell me what you intend to start after this webinar. Just type in the comment section. After now, I'm investing in this. After now, I'm investing in money market fund. After now, I'm investing in the treasury bills. After now, let me know what you want to invest in after this webinar so that we know that you actually benefited from this. So while you're typing that, I want to go quickly to our questions and answer as many as I can take before we call it a day. Please, if for any reason I omitted your question, just type again. I'll pick it, read it, and explain. So please, which one to invest in? Is it federal government bonds or treasury bills? Okay, so if you're asking if you should invest in federal government bonds or treasury bills, I've explained what federal government bond is. I've explained what treasury bill is. It's now left for you to decide what do you want from it. Like I said earlier, treasury bills return your interest immediately. So if you are putting in 100,000 naira, the interest on it will first be returned to you. If it's 20%, it will return your 200,000, it will return your 20,000, then it means you are putting in 80,000. So treasury bills is a discounted instrument and is a short-term instrument. Federal government bonds is a long-term instrument. And is usually for institutional investors. For federal government bonds, you need 50 million. For federal government savings bonds, all you need is as little as 5,000 naira, and the duration is 2 to 3 years. So you have to know why you want to invest. Then you know if you want to invest in treasury bills or you want to invest in federal government bonds. So Muiwa, let me know if I answered that question, if you're satisfied with that answer or not. All right. I'm trying to pick some. What's the difference between? Okay, I've answered this question. Difference between federal government bonds and federal government savings bonds. I've answered that. Sorry to have answered this also. Can one get? Okay, I've answered this also. Coach Bernick, you spoke about the difference between ordinary savings like Ajo and that of compound interest kind of investments, where you ask 10K on monthly basis for 35 years. Please break it down. Oh, okay, I'm just saying this question, but I think I've done justice to this question because I've just spoken about compound interest now. And funny enough, I used 10K as my illustration, just that I used 30 years. So if you want to know what to do, try out that compound interest calculator yourself so that you know it can return how many years you want to invest. So when I spoke about Aja, I was talking about money market fund, and that's the same thing I used when I was calculating for our compound interest calculator. So success goes here. Please let me know if that satisfies you. If not, please reframe the question. I'm going to answer that question again. So it said treasury bills interest rate is higher than federal government bonds. Is it true? Okay, so recently the last treasury bill we had that came out last week or thereabouts on the primary market, I think it's about 17%. But on the secondary market, those that bought treasury bills when treasury bills was 22%, 23%, 24%, you still find some of them on apps. So if for you in particular now, I want you to download I Invest. That should be High Invest. I want you to use yes, download I Invest and go and check the treasury bills on High Invest. You still have over 20% interest. Now, let me quickly say this. When you see things like 20%, 21% per annum, and you have 30 days, you have 90 days. If you write 90 days 20% per annum. Now, it doesn't mean that you will get 20% after 90 days. It means you have to prorate that 90 days over 364 days times that 20%. So you have to divide that 20% into the number of days. I don't know if you understand me. So when you say 90 days, 20% per annum, you're not getting 20% in 90 days. 20% per annum means 20% per year. So in 90 days, it's just a fraction of that 20% that you are getting. So it's good that I quickly clarified that. So treasury bills interest rate is higher than federal. So for federal government bonds, now federal government bonds are different from federal government savings bonds. Don't forget. For federal government bonds is a long-term debt instrument. Treasury bills is a short-term debt instrument. Federal government bonds sometimes is as high as is over 20% also. So is it runs pari passu treasury bills, but the difference is that for federal government bonds, it could be as much as 10 years, 15 years, 20 years, 30 years. It's just that it's the same rate you continue to get all through that number of years. But for treasury bills, is a short-term debt instrument. Is for 90 days, that's from the primary market, 90 days, 180 days, 364 days. But on the secondary market, you can even get as low as 40 days, 30 days, because secondary market means that somebody else has bought on the primary market and is selling on the secondary market. So the days can be different from the 90, 180, and 360. So what determines the monthly interest rate? How should we watch the rates to know the best rates to buy federal government savings bonds? Okay, so for federal government savings bond, the rate is determined by the DBM. Is it by the CBN now? Because it's not something you can decide. When it is decided upon, they release it to the public. You check if you are satisfied with it. But the way to know the rate, every first Monday of the month, every first Monday of every month, federal government savings bonds will be out. Again, I repeat, every first Monday of the month, federal government savings bonds It's they will tell you it runs between Monday to Friday, but preferably make sure that if you want to invest in it by Thursday, make sure you have done every necessary thing you need to do, because on Friday it's usually not easy to still make that investment. So your question is, how do you know? So the interest rate now is going to be released alongside every month. So as each month, every month, once it is released, the interest rates will also be released. So you can compare it with any other type of fixed income instruments that is available. Then you can make your decision from it. So said Coach Benita, I really need the explanation for the compound interest. Oh, okay, so I've done that. I've done justice to that compound interest. How can one know a good managed balance fund and equity fund from a bad managed one? Okay. So if you want to know the one that is well managed and the one that is not well managed, go to their history. For instance, I use Stanbic IBTC. Under that Stanbic IBTC, you see where they wrote efficiency ratio or something. Check their ratio. If they have a good ratio, it means that now don't forget that this is not money market fund. We are talking about equity fund. So you check their ratio, check their past records, check their 5-year past record, check what they have returned, check their current efficiency ratio. So when you check it, you know if they have capacity for the next one. Now don't forget that past success, that's their past record, does not give guarantee for the next year. However, it helps you to know that these people have consistently done well, and there is tendency that they will continue to do well, but it's still not a guarantee. But it helps you to know that if they have done well in the past 5 years and they have good efficiency ratio, then it means I can trust them enough to still put my funds with them. Like I said, I use Stanbic IBTC. What is my what if my current address is abroad? Okay, so if your current address is abroad, you can also use it, but you reach out to your stockbroker and that will also be sorted. So not a problem if you're using your address abroad. It doesn't have to be your address in Nigeria. Once you're a Nigerian and you have your BVN, you can use any address of your choice, either Nigeria or your address in diaspora. Okay. Please let your questions keep coming in. We have few. Please, which one to invest on? Is it further? Okay, I've answered that question. You need a more, oh, okay. Amibola just said you need a more powerful internet connectivity, and on and off is frustrating. This wonderful. Yeah, I know it's frustrating. I try my best. We try our best every time. It's just that it's probably not enough. We still need to work more on that. Thank you for that observation. We'll work more on it. I'm using two networks currently, and this is still what we get from it. Thank you for that observation. Okay, please, more questions before we go. That's really big, but the patience is something many. Okay, so Lincoln was saying that the compound interest is really big, but the patience is something many people can't endure. And now, one thing about investing is you reap more when you're a patient investor. Either you're investing in the stock market, you're investing in lands, you're investing in crypto, you're investing in fixed income assets. Your reward comes with your level of patience. So it's how patient you can be and how consistent you can be with discipline that determines the reward you get at the end of the day. What is the security level of my capital with commercial paper? I've explained earlier that commercial paper is not a no risk investment. Commercial paper is issued by corporate organizations. And before you invest in it, make sure that it's a credible company. Somebody cannot just stand up and say that JJ and J is issuing commercial paper. But if you hear that MTN is issuing commercial paper, you can tell that, okay, MTN will be able to pay back. MTN will be able to pay back. So when a company is issuing commercial paper, credit rating. You want to check their credit rating. If they have a good credit rating, you can go ahead and invest in them. If you don't have a good credit rating, then you have no business giving them your funds to work with, because you could just be losing both your interest and your capital at the same time. However, it returns a very beautiful interest if you are patient. being consistent with my mutual fund for compounding. Very good spirit. I love that spirit, Idris. Idris, remain consistent with your now, some of you don't know that when I sit with, see, that is why sometimes you need a community and sometimes you need somebody that is also holding you by the hand. A lot of people, a lot of clients that I've worked with, now they have to report month to month to me on month-to-month basis that they have done their money market fund. Not because they don't have other forms of investment, but you have this alongside because we are trying to build something here. So have somebody, you can create a group, maybe two of you, three friends. Tell yourself this is what we want to do. If you can't do it, come. Let's talk. Let somebody hold you by the hand that he can report to on month-to-month basis that I've done this. Create a group among your friends, create a group among your family. If you feel safe among them, create a group. Do this every month and see how far this is going to take you. Idris, thank you for that input you have into tonight's session. Said I'm going to intensify. Yes, he said, I'm going to remain consistent with my compounding for mutual fund, which pays off funds that invest in bonds. Now, I've explained what mutual fund is, and I've told us that investing in mutual fund can still return about 20% to you on the average on a monthly basis. Sorry, on a yearly basis, even though your interest begins to compound after every quarter. But for bonds, I've explained different types of bonds we have, different types of bonds with different rates. For the short-term bonds, for federal government savings bonds, currently we have the rate at 15, 16%. For federal government bonds, the last one we had was about 20 something percent. So depending on the percentage we have per time, you will know which one is higher and which one is lower. And by that, you'll be able to make your decision. Okay, in all, I will go into treasury bills and commercial paper because of duration. Very fantastic decision. You see how your why, now that's your investment goal. You see how your why can influence your what. Now, because you are clear on what you want to do, because you the duration, you cannot streamline that. This is the particular investment that suits me. And this is what I do for most people when we come for one-on-one. I help you diagnose. Just like I've taught you how we can do this. You can do this on your own. But when they come to me, I have to check. Let's check this thing together. This is this is this. So we can streamline. We can tell ourselves 20 stocks, 50% is going to this, 30% is going to, because this is what you look like. I always say that your portfolio should look like your portfolio should look like your goal. Your portfolio, your investment portfolio should mirror you. It should mirror your why. It should mirror the reason why you're investing. You can't invest in what your friends are investing because you just buy this, buy that because you listen to me on social media, because you're listening to me now. Now, when you're listening to me, know how it affects personally as a person, not as a group. Everybody on this platform will not invest in the same thing. Our portfolio should be different, just as our faces are different, just as our fingerprints are different. Our portfolio Apologize for that. Once again, I apologize for that glitch. Can we hear me? Okay, so let's continue where we stopped. Okay, where did I stop? I deeply apologize for that again. Please just know that we are doing our best to ensure that we have a glitch free and seamless webinar. We'll keep doing our best to ensure that we give you the best we can every time. So, okay, so much was the security of my commercial paper. I've done just that. Can you please make a webinar on balance and equity fund? How one can start. We'll put this consideration. Babalayo said, can you please make a webinar on balance and equity fund and how one can start with it? I'll take note of that question. Let me do a screenshot of that, and I'll be able to about webinars. All right, so let me. So Babalayo, your question is noted, and we'll work on that. So somebody will remain consistent. Okay. So which pays higher between? I've answered that. I've answered in all. I'll go into tributes. Okay, link on link. Yes, we are sorted with that. Thank you for speaking about the compound interest stuff. My main question is, speaking on a monthly basis, am I getting the same rates or what? That's the issue. Now, if you say you're saving monthly, in which instruments? I need to know the instruments you are using before I can answer the question. So please let me know, talking about which instruments. You said if you are saving every month. Saving now, I believe you are talking about if you are investing, because if you have attended this webinar tonight, when I'm talking about savings, if you are talking about savings, I believe you should be talking about your savings in an investment instrument. So please, it should be in an investment instrument and not in your bank account. But let me know the particular instrument you're talking about, so I'll be able to do justice to that question. Can you also make a webinar on the difference between index fund and ETF and how one can start investing with them? Okay, so for some of these questions already, I already have a we already have some of them. Some are free on the website. So let me display on the screen our website. The website is www.cifacademy.com. www.cifacademy.com. So you can visit to the channel. Like so that when I release any video, you get it. I'll make videos on all the things you have talked about. I'll make videos in them gradually, and I'll post on my YouTube channel. To do for my post, anytime I make a post, just watch out for it. I could just be answering your question. So I'm taking notes of all those questions, and I'll be answering them gradually in my videos. All right. So Oladapsi Babalayo, that question, you can either find it on www.cifacademy.com, or you watch out for my videos then you find it. Also, we have a group, we have a community. It's free. The phone number is on the screen. If you want to join, it's 080-8100-8686. I will take it again. Let me see if I can type it in the comment section. 080-8100-8686. So if you want to join the community, feel free. This one is a free community. We have a paid community, but this is a free community, and I tell you, you also have a lot to benefit. You meet people with like minds. How do I get your investment community, or do I get manage my portfolio? All right. So I've been if you reach out on that WhatsApp group, you'll be able to communicate with me. Or if you go to www.cifacademy.com, www.cifacademy.com, you have access to me from that website. It will lead you to me from that website, and you'll be able to book a session. If you want to book a session with me, feel free to do so. It's paid, but I tell you that you will leave with clarity and you'll be glad that you did. All right. So Temitope said, what is the process of to withdraw early from FGN savings bonds, and what are the charges? Also, how do I know when the interest rates will keep increasing to invest in it? Okay, let me take you one after the other. So what is the process to withdraw? So if you're invested in federal government savings bonds, if you are using an app, if your app has withdrawal for money market fund, you have withdrawal. This one should not have withdrawal. You reach out to your stockbroker. If you use a stockbroker, reach out to your stockbroker. Tell them you want to terminate your federal government. Okay, federal government savings bonds. Yeah, tell them you want to terminate your federal government savings bonds, and you just be able to do that seamlessly. And he said, what are the charges? Now I don't know the charges. Charges vary from platform to platform. So it depends on, that's why I said that whenever we are investing, please try to read the terms and conditions of these platforms. Their terms and conditions varies for each instrument, for each platforms. So that when you invest and you feel like you want to withdraw, you are not just surprised at why are they taking so much penalty for withdrawing your investment and for withdrawing your funds before maturity. So this is something that you want to check the platform you are using, check their terms and conditions for their penalty before you even invest. If you feel you might not be able to wait to maturity. But the reason why we have talked about different types of instrument tonight is because even if it's 30 days, you know that there's an instrument for you. So I don't see any reason why you should want to invest and plan to take withdrawal. I know the unforeseen things happens. However, if you foresee that you might need the money before time, you might just want to go for something that is more of a short term than the federal government savings bond. Is there a specific time that companies release commercial paper? No, there's no specific time. Okay. Great to have you, Boki. Thank you. Chukuno. So I meant in the same investment vehicle where you electric. Okay, so money market fund for 30 years. Now I have to look for that question again. Let me move on. Okay, so since that's the last question, you said, I mean in the same investment vehicle where you illustrated. So the vehicle I was talking about was money market fund, but now I have to go back and check that question again. You said, my main question is, if I am saving on a monthly basis, am I getting the same estimate rate or what? Okay, like I told us earlier, can we still hear me? Okay, so like I said earlier, that if you're investing in the money market fund, if it's 20% per annum, I every quarter. After 3 months, the interest that has accrued on your investment for 3 months will be added back to your capital. Then both your capital and your interest will now begin to yield interest. So in this case, you could start with, let's say you started with 50 million. Your 50 million can become 60 million. Now, your interest now will now start on 60 million, not on 50 million. So even if the rate is 20 million every year, the matter is that the funds you have in that assets has increased. So your interest will also increase. So that's why we said it's compounding. You could have 60 million this year. If you have 60 million this year and you have 20%, 20% means you have 12 million, which is 72 million. So by next year, your initial capital is no longer 60 million, it's now 72 million. Now, if you have 20% of 72 million, that's 14.4 million. So we are talking about 96.4 million or thereabouts. So that means for the third year, it's no longer 72 million, it's now 96.4 million. So you can see that this is a game of numbers. That's where compound interest comes in. So your is your continuous interest, your compounding interest is on both your interest and your capital. So I hope I answered that question. How do I get to your investment community, or do I get to manage my portfolio? Yes, like I said, that you can visit www.cifacademy.com. So www.cifacademy written in the comment section the phone number to join the community. So either you're joining the community or you're coming through the website, it will give you access to me. So on the website, you'll see something like one-on-one session with Coach Benita. You just go ahead and make payment. It's not free, but you're going to leave with clarity and you just be clear to know what to do on it. And I'm going to hold you by the hand. We have after the session, you still have access to send messages, to send me voice notes, and I'm definitely going to respond to you personally. Nobody will is I'm going to be the one to respond to you personally. All right. So having said that, what is the process to okay, I've talked about this. I think that is all. So he said, when do I know the best time to enter money market fund or savings bonds? Okay, so money market fund is anytime. So for some of you that want to start your money market fund, you can start tonight. Don't wait till tomorrow morning. Start tonight. After this session, take up your phone. If you are using Stanbic, if you are using High Invest, whatever, whichever one you want to use, download it tonight. If you want to use the bank, then you can choose to go to the bank on Monday. But download the app tonight. Initiate the process tonight. It tells your mind that you are ready to take that journey. So money market fund can be done anytime. It's not something that it comes out from time to time. Any day, anytime, you can start investing in money market fund. So he said for savings bonds, how do you watch the rates? Like I said, for federal government savings bonds, is every first Monday of the month. Every first Monday of the month, you get go to the debt management office website. Just type on Google DMO website. It's going to take you to the website. Check the website for the new federal government savings bonds, and you will get the rates. Also, if you are following me on TikTok, you're following me on Facebook, you're following me on YouTube now. I post all of these updates. You get updates on when these things come out. Especially if you're following me on TikTok, I always post everything you need to know when all this either is commercial paper or any one of them. I usually post them on my TikTok, or sometimes you find them on my shorts on my YouTube. So when I want to take early withdrawal in federal government savings bond, who will pay me or I am selling it? So when you are making withdrawal now for federal government savings bonds, it's not as liquid as federal government bonds. So let me just give you a caveat. If you plan to invest in federal government savings bonds and you know that you need the money before 2 or 3 years, I advise that just go for money market funds. However, money market funds even returns a higher rate than federal government savings bonds. So money market fund is a better option. Either you're looking at the interest or you're looking at the duration, because money market fund does not have a duration. It could be anytime from 30 days to as long as you want it. So somebody is saying, how much is your one-on-one session? So my one-on-one session is 50,000. So if you're interested, just go to the website and every other details you need, you get it on the website. All right. So if you have learned one thing or the other tonight, please, I want to see it in the comment section. Let me know what you have learned in the comment section tonight and before we call it a day. Thank you everyone for showing up. It's good to know that we have a lot of people that are interested in building their financial wealth, living where they are now, and planning ahead for their future. Let me know what stood out for you in the comment section before we call it a day. So thank you everyone for showing up. I think I have a few of the alumni of my school in tonight's session. So I want to say thank you for joining. Thank you for joining tonight's session. So let me know what you learned before we call it a day. Let me know what you learned before we call it a day. If you don't want to type, then I might have to say good night from here. I know we have learned one thing or the other from here. So thank you, everyone. For us to have those conversations, for us to have those conversations so that so we continue to keep others informed. So thank you, everyone. Just type in the comment section what stood out for you in tonight's session. So thank you, everyone. Temitope said the power of compounding. Yes, the power of compounding. It's a game changer. Thank you very much. It's good to know that you picked that into tonight's session. So let's have one or two more people. If we don't, I will still call it a day because we're 4 minutes past our time. So, like I said earlier, if you'd like to book a session with me, visit our website and you have access to me, and we'll sit down, we'll run a diagnosis on your finances, and we'll know what best fits you. Since I'm not getting more responses, I would like to call it a night from here. Thank you, everyone, for watching. Thank you for coming, and have a nice weekend.